Right, let's read through requirement A again. Guys, if you need to read through the requirement 3, 4, 5 times, you do that to ensure that you understand what you need to do. Prepare only the assets section of the consolidated statement of financial position of the Timber Group Limited as at 30 June 20.19. On the right side of your screen, you will identify that I've included my plan of action. Now, you do not have to write out a plan of action, guys. I write this out for you to be able to follow my discussion. But you need to practice this at home, having a plan of action. This is your exam technique. We need to include our assets section in terms of our statement of financial position. Therefore, my first step, I will include a template. Now, guys, templates can have different meanings for each of us. But for me, guys, a template is including a guideline of what I need to do. I will look at the trial balance and I will identify my non-current assets. I will transfer this to my template. I will identify my current assets and I will transfer this to my template. Now, on a clean page, I will indicate to my marker that this is my part A. Don't run away, guys. Focus. You will identify that I've included my non-current assets. I've left some lines open and I've included my current assets. Leave open sufficient lines. Then on the right side, middle of the screen, sort of, guys, you will identify that I include additional columns. And it is extremely important that you indicate to your marker that this is purely calculations. Guys, my recommendation, remember, when you get a booklet in the test or exam, open your booklet to ensure that you have your 2 A4 pages next to each other. And use these pages, include your columns, leave open sufficient lines for you to be able to add smaller calculations, guys. Leave open sufficient space. But it is important, if you make use of this method, that you do indicate to your marker that this is your calculations. I got quite a lot of questions last year, but may I include additional columns? Yes, guys. But the requirement states that you need to include this section here, guys. On the left side, this is your requirement. This is what you need to include. On the right side, this is my calculations. I know that I need to include 100% for my parent. I know I need to include 100% in terms of my subsidiary. And then I indicate journals. You can include calculations. You don't even have to include a heading, because this is in terms of my intra-group transactions. Now, every time when I have to perform or I have to complete profit or loss statement, statement of financial position, I do it like this. This provides me with a guideline. This is my exam technique. Right. Then my next step, I include a timeline. You will identify timelines. For me is extremely important. This helps me to ensure that I understand the scenario, that I remember what to do, and a structure. Right, guys, now this is my workings. Please, guys, you have 2 options with this page. Either, number 1, you will use this for calculation purposes. Your marker will have to understand this. Therefore, you need to do this neatly. Or number 2, you do this for yourself. Guys, then please do not spend too much time on this. You don't have time. Right, I prefer to do this for myself in this question. There might be instances where I make use of this for calculation purposes, but then you need to ensure that your marker understand. Right. Now, when you look at this, we have Timber Group, which is our parent, that has 65% in a subsidiary called Oaky Woody and 35% in an associate, Cherry Wood. We need to apply IS 28. Therefore, in our group, guys, very important, in our group, and I just want to write this here, guys, in our group, you know that you will have to add your parent plus your subsidiary, and in terms of our investment in our associate, you will have a line item, investment in associate, in your statement of financial position, and in your profit or loss, you will have a line item, profit or loss from associate. Look at the difference. Therefore, immediately we have now identified that we need to include in our template here, guys, investment in associate. Because we have an associate. You with me? Right. Then when you look at my timeline, our year end, 30 June 2019, prior 2018, year before that, 2017, they've indicated to us that acquisition of our associate, Cherrywood, is 1 January 2017. Acquisition of Okie Woody, our subsidiary, 1 September 2018. Therefore, when you look at the timeline, we will have to include 10 months in terms of Okie Woody into our group. Guys, remember, you need to decide up front, will this be for calculation purposes or for yourself? Or if for yourself, please do not spend too much time on this. This is for yourself, right? Then when you look at the right side, step number 3, question mark. Are you going to make use of an analysis of owner's equity? You will identify throughout the year that I do prefer to make use of analysis of owner's equities. This do help me. This is a guideline again. But guys, you need to think about this as well. When you think about the requirement states that we need to include our assets. If you think about an analysis of owner's equity, if you state yes, you have your at acquisition section, your since acquisition section, and your current year. You with me? In terms of your since section, you need to include your NCI's profit, your NCI's retained earnings, your NCI's profit. Do we need this? We need to prepare the analysis of owner's equity. No, we don't need this, guys. But we need to determine at acquisition date if there is any goodwill. Because if there's goodwill, this is an asset and we will have to include this in our non-current assets, goodwill. But at this point of time, we don't know. Therefore, I do prefer my analysis of owner's equity. But guys, I'm not going to waste time. I'm only going to include the at acquisition section. Now, you don't have to use your analysis of owner's equity. Therefore, you can state, no, I'm not going to use this. But guys, if you make use of the analysis of owner's equity, focus. We only need assets. Therefore, please don't waste your time. Right? Now, you will then identify on a new page. I will indicate that this is my calculation number 1. And this is going to be my analysis of owner's equity of Okie Woody. Guys, don't waste time, please. This is calculations. You don't have to write out everything. Share capital. Rather just indicate SCRE, mark to market reserve. Remember, in your calculations, you may use abbreviations. Right. Okay. Now, in terms of my steps, step number 4. I will start to work through the information provided. I will identify and I need to focus on assets. And I will prepare calculations. And once I complete a calculation, I will transfer this to my templates, guys. Right. Now let's refer to the scenario. Let's work through the scenario. Our at acquisition date, remember, they've indicated to us is 1 September 2018. They provide us with the details in terms of the purchase price. I will make use of pink for you to be able to follow my discussion. Now, remember, we need to determine what is the consideration payable, right? Remember, this is the amount to be paid by our parent to the previous shareholders. Now, when we look at this, they indicate to us that there is 800,000 cash. Okay, so where am I going to include this? I need to determine what is the goodwill. Therefore, I'm going to include this in my analysis of owner's equity as a calculation. Remember calculation 1, and on the right side I will include calculation 1.1 consideration. Now they've indicated to me that we have the 800,000 cash that will be paid. I've ticked off my 800,000. Next bullet point, issue of 30,000 OG shares in Timber Group to the previous shareholders of Oaky Woody. Now guys, 30,000, when you refer to the additional information at the bottom of your script, you will remember they've indicated to us that the fair value is 18 Rand. Therefore, in our calculation, we have the 30,000 shares times 18 Rand, and this is an amount of 540,000. Tick off first, second bullet point. Third bullet point, the issue of 56,000 mandatory redeemable 8% cumulative 2 Rand preference shares in Timber Group. The preference shares are redeemable 3 years after acquisition date at a premium of 5% on the face value. Now guys, the way that I remember premium, and I include this bigger, therefore add 5%. If we look at the discount, less. Right, okay. Now, we need to determine what is the present value of the redeemable preference shares. To be able to do this, we need to calculate the future value, the period, our rate, and our payments, and determine the present value. Right, I've included on the right side my preference shares, guys. You do not have time to write out all of this. I do this for you to be able to follow my discussion. You need to indicate all of your calculations. Therefore, my payment is the 56,000 times 2 Rand times 8%, and this is 8960. This is an input into your calculator. You need to indicate all of this, please. My period will be the 3 years. They've provided this to us. The rate, 9%. Guys, they've provided this in the additional information section. And my future value, 117,600. Identify that I times this by 105%. Therefore, my present value will be 113,489. And this I need to add in terms of my consideration. Therefore, calculation 1.2, and I need to add 113,489. Right, now we are allowed to tick off this bullet point. Next, financial assets. We have identified we need to use the fair value, 336,000. Therefore, let's include this. Plus 336,000. And then the last bullet point, you'll remember they've indicated to us that they incurred 17,000 acquisition related costs and 14,800 in terms of the issue of the shares. Guys, we need to expense these costs. You can refer to IFRS 3 paragraph 53. We need to expense this, therefore we need to take it out, guys, from the 800,000 because they indicate included in this 800,000 cash, the first bullet point. Therefore, we need to take this out. Therefore, minus 14,800 minus the 17,000. Then the last item in terms of the purchase price, the contingent consideration that we need to add, the 130,000, the fair value, contingent consideration. Therefore, we need to include this in our consideration calculation plus 130,000, and our total consideration will be 188,689. Right, we have now determined our consideration. We need to move on to our net assets at acquisition. Let's just tick off this bullet point. Remember guys, they've indicated to us that there is inventory that was overvalued. Therefore, we need to decrease the net assets with the 58,000. In my at acquisition, remember, all identifiable assets and liabilities should be at fair value. Therefore, I need to decrease my net asset value at acquisition date with the 58,000. I need to remember the tax in terms of this deferred tax, and this is the 58,000 times 28%. Now guys, if you make use of the abbreviation K, indicate to your marker, I'm going to do this top right corner, that this represents 000. It will save me some time. Therefore, 58,000 times the 28%, and this will be 16240. Then a reminder to myself that they have sold 60% in the following year. Right? I'm not going to complete my analysis of owner's equity. Remember, I've decided this at planning stage. Okay, therefore I can tick off this bullet point. The second bullet point, remember, we've identified that we're not going to include this. And you will also remember that this is part of the discussion of part B. Third bullet point relates to a unique shape in terms of blinds. And we have identified that the value is 230,000 on 1 September 20.18. But, guys, very important, we do have the 250,000 value. We know that this is a measurement period adjustment, right? You with me? Therefore, I am going to include the 250,000 at acquisition date and not the 230,000. Guys, you can look at the solution. In the solution, we have done this separately. First the 230,000 and then the additional movement. But I'm going to include the 250,000 because I now know that this is a measurement period adjustment and I need to use this. Therefore, you will identify in the solution that we have this measurement period adjustment section. But I prefer to include this at acquisition because I do know that I will have to include this intangible asset. And this is 250,000 increase. And my deferred tax, 70,000, and very important, I need to remember my amortization. Remember, focus, guys. We need to include our assets. Okay, don't forget this. Okay. Now, when we look at this, they've indicated to us that the useful life is 5 years. I'm not going to tick this bullet point off because I want to ensure that I remember the amortization. Right, next bullet point. They've indicated to us that they have already included the liability. And during our reading time, we have identified we have an indemnification asset. And they've indicated to us that the claim will not be deductible for tax purposes. Therefore, in our at acquisition date, we need to include the contingent liability. Remember, this is in terms of our group. And this is an amount of 155,000. And we need to include our indemnification. Okay, that we need to calculate. This is the 155,000 times the 45%. And this is an amount of 69750. Okay, so guys, if you think about your at acquisition journal entry, immediately you will identify that this is an asset and we need to include this on the face of our statement of financial position. You with me? Therefore, we need to indicate that this should be included on the face. Now, is this non-current assets or current asset? This will be a current asset, guys, because this will be within the next 12 months. This will realize. Therefore, indemnification asset. Your choice if you want to include your calculation or reference to your analysis of owner's equity. And this is an amount of 69750. Again, if you make use of K, indicate to your marker the meaning somewhere. Just ensure that your marker will be able to identify this.